In this video, I'm going to be sharing with you 3 ICT concepts that I use in my own trading plan that help me to make profitable trades. There are many different ways that you can trade, and when you formulate a trading strategy or a trading plan, there are so many different factors to consider. Quite often, people will want to just replicate successful traders' strategies. Surely that would make sense. Surely that would win, right? But I like to think of trading more like an art form. It can be very difficult to completely copy exactly what somebody else has created, but you can certainly draw inspiration, and you can even take some different components and ideas of somebody else's artwork. But ultimately, it's about bringing it to your own canvas, creating your own repertoire, or in this case, drawing in some inspiration from successful traders and incorporating them into your own trading plan. And so, although I do not copy ICT 100%, I do not replicate his strategy, I certainly incorporate a lot of the different components that ICT uses, and I use them in my own trading plan, and they help to give me an edge on the markets. And in this video, I'm going to break down 3 of those components that I use, and I'm going to share them on an example of a trade that I took in the live markets this week in both my live account with ICT Markets and also the prop firm, the 5%ers who I trade with. As always, please remember to like and subscribe to the channel. All of the software that I'll be using is linked in the description below, and let's get straight to it. The first component that I'm going to talk about with you is time theory. As we all know, the Forex markets are open 24 hours a day, 5 days a week. So technically you could just open your broker and place a trade at any point in the day. But it's important to know that the market fluctuates and the volume shifts throughout the day. And this is where the first component that I use, time theory, comes into play. If I was to go onto the charts and just place a trade instantly at any time of the day, or let's just say it's the evening, you will get different results than if you place the trade at, let's say, the morning. And that's because there will be different volume shifts depending on where the time zones overlap. Now, there are many different markets all over the world, but there are a few that are the major ones because there are a lot more volume, there are a lot more transactions that take place during those periods of time. And I'm talking about the different crossovers. If you're new to the Forex markets, the main crossover point in time will be the London session and the New York session. So the London session is generally when Europe and then of course London, the markets open, which is around about 7 o'clock in the morning GMT. And it's also important to consider this in line with any news release, which is usually around about 7 a.m. GMT. That is a pretty high volume point in the day. And so it's important to note that if you're looking for trades and you're trading in that time zone, then you may get some better results because you may find that the market is more responsive because more people are awake and trading. Now, ICT talks about the different sessions. So he will trade the London session, which is around about 7 a.m. GMT to 10 a.m. GMT. And then there will be the New York session. Now, there are a few different ways that people calculate this, and for myself, to keep it simple, I prefer to go from when the main news is released. So I look at 1:30 in the afternoon GMT. That is when, if there is any news for the US dollar, that's when it's usually released. Now, it's also important to note that you may get another volume surge at 2:30 GMT, which is in line with when the stock market opens, the New York Stock Exchange. So it's important to note these key points of time when different markets are opening and operating, because they can bring volume and that can obviously affect any trades that you may be into. I use a really useful indicator to help me to keep track of time theory because it can get a little bit confusing, and that is called the sessions indicator. In TradingView, I'm presuming you use TradingView because it is probably the best charting software out there. Underneath indicators, if you do a search for sessions, I have it saved here, Sessions on Charts by Forex, and that adds in these vertical lines. Now, it may not look exactly the same as mine because I have gone into the settings, the little cog here, and I've customized mine. So I've tried to make it simple, and I've also edited the times. Now, this is where it can get a little bit confusing. I have had some questions about this on my channel because it really depends on where you are in the world, and you will have to calculate this for yourself. So I have UTC on my time zone here. Some people may prefer to set this to the time they want. It's a personal choice. I prefer to convert. So I know that the London session is from 7 till 10, but this uses New York times. So I have to adjust this to New York times, which is 2 in the morning till 5 in the morning. And then the New York session itself here is 8:30 until 11. This would be for the New York session equivalent of 1:30 GMT here in the UK. There's also the Tokyo and the Sydney session, but I don't actually show those on my chart because I don't trade those. I don't trade the Asian sessions. I prefer to sleep. So I just have London and New York ticked, and I have just chosen the colours red for the London session and green for New York, so that at a glance it's quite easy to see what the market is doing. I tend to just trade during those times because personally I find I get the best results. And another key factor to consider when it comes to time theory as well, it's not just about trading during a certain time, it's being aware of what exactly the market is doing in that time compared with the perspective of the overall price action. Now, the second component that I utilize, the second ICT component, is utilizing key levels. And this is almost crossing over from time theory. I identify the time, then I will identify key levels. And it is crucial. It really helps to formulate a trading plan. So I'm working with pure price action. I don't use any other indicators, no moving averages, nothing messy on the charts, but key levels are crucial for my trading plan. What levels am I talking about? Well, let's look on the charts. Here we are back on the charts for pound dollar, and I've taken this back into time to Tuesday morning, just before I took my trade in live markets, so that I can share exactly how the components blend in with making a trading decision. So we've just looked at time theory. The pink vertical section is here because we've just entered into the London session, which means that I am looking for trades. Now, the second component and the second step that I utilize is key levels. So there are a few key levels to consider. So first of all, I'm going to look at the current daily open, which you could go to the daily time frame, but I'm just going to look here at the 10 o'clock, which is basically when the day opened. And let's just bring this line out. So we've got the current daily open. Now there are some more key levels that I would like to incorporate, and that is the previous daily high and the previous daily low. You could do this manually. I prefer to use an indicator simply just to speed things up. So I'm going to add daily high and low indicator. So another free one, you can do a search for it on the indicators panel here if you wanted to add it. And we've got this light blue line up here, which is the previous daily high. And at the bottom, we've got this dark blue line, which is the previous daily low, which means that we can focus all of our attention on the current day. And we know at the moment that price has already had 2 touches of the previous daily high. So we're trading at the top. Now, let's look at price action and how this relates to those key levels. So from the market open, price has pushed up. It's made a high. It's then done this little consolidation, but it's pushed down. It's made a low. Then price has pushed up. It's broken the previous high and made a new high here. So at the moment, pre-London Open, we are swinging higher. We broke the previous daily high, but we didn't close above it. In fact, we got 2 wick rejections, which for me is a sign of weakness. From this high, price has come down. It didn't quite break this low. It pushed back up, but then it didn't break this high. The London session started and we got this huge drop down with the body closing below, making a new low of day. This is a very bearish pattern for me, because we have pushed up, we've tried to break a key daily level, we didn't get a close above it, and then price has now broken below the current daily low, and we are trading underneath the current daily open. So all these levels, and obviously the time of day that this happens, is very crucial. At this point here, that was when I realized that price was ready for a trade. And that's when I brought in my third and final component. So the third ICT component that I like to use in my trading is a Fibonacci retracement tool. I've been using Fibonacci retracement tool for years now, and I just really like it. It gives me an edge on the market, specifically on where to enter into a trade. If you're not sure what a Fibonacci retracement tool is, I have created a separate video about it, and Fibonacci itself is really quite an amazing thing. It's present throughout nature and it also affects the markets. It's pretty fascinating, but in this context, it helps us to identify where to get into a trade. So let's draw it now. Using the Fibonacci retracement tool is really quite simple. Once you have identified your market structure, as we have done now, we've got our high of day and now we've got our lower day. Utilizing the Fibonacci retracement tool is pretty straightforward. Because we are going down, we are going to, first of all, place the line, the tool, from the highest point. Because we're going down and I think price is showing weakness, I'm looking for a short. So I'm going to place the fib at the highest point here using the bodies only. And then I'm going to drop it at the lowest point where we have had this close below this break. Now, your fib tool might look different because I've customized mine utilizing ICT concepts. What exactly does that mean? Well, that means that we have got these 3 horizontal lines here in the middle, other than the number 1, the starting point, and the 0, which is the end point. And those 3 lines are what are referred to as optimum trade entry, OTE. They are the 79%, 70%, and 62% level. And it can just show us an area where price is likely, very likely to pull back to. If I go into the settings of this fib, there are many different options and you can customize them all. Some people prefer to use the 50% level, half of a retracement, but I found that price tends to retrace even further. It likes to retrace quite close to that highest point. So the way that I used it in this context is I would set my short position at the lowest of these 3 lines, the one that's closest to where price is currently trading at. My stop was above the high of day, so I used a 15 pip stop. I used a 1.5 hour profit target, so it was targeting just past the low here, low of day. That was my trade plan. Once I planned this out, I set this position, the sell limit in my broker. Price pushed up, and at 8 o'clock, as you can see, it triggered me into this trade. It pushed up into the optimum trade entry levels, these 3 lines. It tapped them, and we got this big wick rejection. So it's a really nice resolution because I'm triggered in, but it immediately shows weakness. And from there, price pretty much drop straight to my target. For those of you who like to see the real trade data, I will just load that up here now in my broker. There's a trade pound dollar on the 19th. So I got into this, sold at 78. I trailed my stop loss in the end and I got out at 54, which you can see here. So 78 and 54. Which has put me up quite nicely in my prop trading account here with the 5%ers. For those of you who've been interested in following my prop trading journey, I have been trading this for the majority of this year. I'm currently in the hypergrowth program. And my approach with this program is a little bit different to my live trading account, and it's simply to manage my emotions. So I'm taking it very slow. I'm only taking an A quality trade a week, aiming for 1 win. So it's slow progress. It might not suit everybody, but it suits me because I know that the long-term goal of this is very much worth it. The 5%ers have an extraordinary scaling plan available whereby if you focus on taking the best trades over time, they will scale up your account as you are making profit, and you have the potential to trade a lot of money and obviously in return make a lot of money. If you want some more information about that, I've created a separate video which reviews the hypergrowth program in detail. But I'm getting pretty excited because, as you can see, I'm getting really close to my target now, and I just keep going. If you want some more information about the 5%ers, or you feel like you want to have a go at a program for yourself, I have got a link below in the description where you can check out the programs they've got available. They've also got high stakes and they've got the bootcamp program in addition to hypergrowth. There's a lot of talk about ICT, the fellow YouTube channel, who has created a massive following over the years, and he's got a lot of followers and also a lot of haters as these things go. Personally, I was watching a lot of his videos a couple of years ago. I haven't watched many recently at all, simply because I don't have the time. I don't really watch many trading videos anymore. I'm just busy trading. But I have incorporated a lot of the concepts from the content that I watch that has worked, and they are mainly the ones I've shared with you in this video, utilizing time theory, incorporating key levels, and also utilizing a Fibonacci retracement. Personally, I have found that these 3 components have really given me an edge on my strategy, which is why I've added them to my trading plan. Do you currently use any ICT concepts? Let me know what they are in the description below. It's always great to hear from you. Meanwhile, if you've enjoyed the video, please let me know by hitting that like button. Don't forget to subscribe to the channel below, and I'll catch you in my next video. Thanks for watching. Bye.